Welcome. The company being analyzed today is Indiamart Intermesh Limited, and we're going to call it Indiamart because that sounds very catchy. Indiamart. So, this company is very interesting. It is, in fact, India's largest digital B2B marketplace. So, B2B, it's for business to business, basically a place where if you own a business, like you own a business and you're looking for some things you want to buy for your business, you can go on IndiaMart, that is the website of IndiaMart, and you can buy that. You can look for suppliers who will supply you that product that you need for your business. So it's a B2B place where suppliers and buyers can connect. Amazon for businesses, basically. Okay, so IndiaMart Intermesh, we are going to analyze this company. We're going to take a look at some of its financials over a long period of time. We're going to take a look at some very important details. We're going to take a look at its business model, its balance sheet, its cash flow, its strategic investments, and maybe even about the future. And this is not financial advice. So let's begin. First, we have information about its market pricing law. So, a fairly big company, 16,000 crores in market cap as of 22nd August 2025. Yes, current price of one share 2,670 rupees. Book value is only 364 rupees per share. The price to earnings ratio is 27.2, so pretty high. The return on equity is a very nice 26.9%, while return on capital employed is a very nice 34.2%. So by these metrics, very efficient business is what it looks like. The dividend yield is 1.12%. All right, so dividends are 1.12% of total stock price. Fine. So let's take a look at its financials. So here we have the profit and loss of this company from 2015 all the way to 2025. Here is 2025. Here you can see March 2025. So all these numbers are again in crores. All right. Crores of rupees, crores of rupees. Here we have sales. Here we have operating profit. Here we have profit before tax. And finally, profit after tax. One more thing, there's interest here, interest payments on loans. That's an important metric. We'll see how much it pays in interest, how much loans it has. So, first, sales. 2015, a very small company, 176 crores in revenue. Still, 176 crores is big. Still big. 176 crores in revenue, minus 52 crores in operating profit. All right. Operating profit margin is minus 29%. Minus 29%. So it's a loss making company. Here we move to 2018 with 411 crores in revenue and massive sales growth, double digits high sales growth, still negative profits, minus 76 crores in operating profits. 2019, it turns positive, 507 crores in revenue and 17 crores in profits. And we see is a massive jump. All right, 2021, 670 crores in sales, 326 crores in profit. Okay, operating profit, 49% operating margin. So big swing up. So it seems that in the early years, you can say it was making a lot of investments, making a lot of expenses. It was spending way more in order to ensure growth and all. This is expansion phase kind of for the company. But now we move forward. Let's move to 2025. 2025, 1,388 crores in revenue, 474 crores in profits, 34%, 34% operating margin. And this number you can see 551, like on my right, net profit, 551 crores in net profits. So, very high profit margin company. All right. Again, it's mostly a website. This company is mostly a website. So that's what explains the higher margins. So here we see compounded sales growth. Now, the compounded sales growth for the past 10 years has been 23%, extremely high. 5 years, 17%. Last 3 years, the annualized sales growth has been 23%. Last 12 months, that is TTM, 15% sales growth. So very fast growing company. But the company is facing issues of slowing down. We are going to discuss that. Now, the compounded profit growth is 30% over the last 10 years, 29% over the last 5 years, 21% over the last 3 years, and 62% growth in profits last 12 months. That is the recent month compared to 12 months ago. So 62% growth in profits. Then we move on, we see the return on equity. Last 5 years, again, there's no last 10 years data because 10 years ago it was unprofitable. So last 5 years, 20% return on equity. Last 3 years also, and last year, 27% massive rise. Then one last thing to show here is this. This is cash flows. And here we're going to take a look at cash flow from operating activity. Okay. Again, negative in first few years. Cash flow is a very important metric in finance and in valuing companies, especially free cash flow. But right now, let's take a look at operating cash flow. And here you can see from 2018 onwards, it's positive. Okay, it's 179 crores. We move, we see in 2021, it's 322 crores. 2022, 402 crores. 2023, 476 crores. 2024, 559 crores. 2025, 623 crores. The cash flows, the real cash being produced from the business, different from net profit. Okay, cash flows, it's a very highly cash flow producing company, Indiamart that is. So we looked at some of its financials and we found out that high return on equity over the last 5 years, a lot of growth in revenue, a lot of growth in profits, and a lot of growth in cash flows. Now, let's take a look at its business model. All right. We're going to take a look at its business models. Yes, IndiaMart, the business review. All right. So, this is again traditional marketplace to online marketplace. Okay. Earlier, there was offline discovery. We had to actually go to locations to actually find products and all. And now, of course, it's online. Online. Here you see a lot of terms being mentioned. Let me just zoom in a bit. Okay. Conversational commerce, CRM, that is customer resource management, accounting, tax, and invoicing, business enablement SaaS, that is software as a service. These are all, you can say, services offered by IndiaMart on its website to suppliers. Okay. Again, one thing to mention, its main source of revenue are paying subscribers. Okay. There's suppliers who buy a subscription. Okay. Suppliers will buy a subscription from IndiaMart. And IndiaMart will provide them all these services like conversational commerce like chatbots, like ability to make calls to customers, CRM, customer resource management. Important thing, it provides all these services that will help you interact better with your customers. Okay, accounting services, tax and invoicing services. Invoicing, sending a bill to the customer and all that. Making sure the bills you send to your customers, they actually get your money back. All these services IndiaMart provides. So, main thing here is offline discovery to online. Okay. This company is India's largest online B2B marketplace. Okay. And here you can see behavioral driven, okay, behavioral data driven algorithmic matchmaking. So they use data science, they make use of machine learning and artificial intelligence for matchmaking. That is matchmaking appropriate suppliers with appropriate buyers. Strong networking effects. This is an important point. This is a moat for the company, a special characteristic for the company, which we will discuss later. But now, the very most important thing, in my opinion, here is this subscription based revenue model with negative working capital. What is this? Negative working capital. Oh, sorry, spoilers. Negative working capital is the main thing here. That is extremely important. Main thing here, what this means is its customers, its suppliers, right? Like India Mart's customers pay India Mart before they give India Mart an advance before India Mart actually gives them the service. All right. India Mart receives money from customers and then it supplies its services to the customers. In many businesses, the business will give the goods or the service to its customers on a credit. That is, customers can pay back the money, can give them the money, can pay for that product after fixed period of time. It's 30 days, 60 days. India Mart receives it before. And this is very important. This subscription based revenue model, this negative working capital is a big reason for their high cash flows, for their ever increasing cash flows. All right. So it's a very important point. It has a negative working capital. Okay. So, yes, discussing more about its business model. All right. Here we have buyers, here we have suppliers, and India Mart is in between them. So, India Mart is connecting buyers and suppliers. Again, all these things written below suppliers like CRM, accounting solutions, logistic solutions. We will discuss this, but it's India Mart is focusing more on supplying various types of more services to suppliers. RFQs, that is request for proposals, all these things. Then, discussing more about its business model, we have this key comparative strengths, brand and network effect. Network effect is when more and more people join your service, it makes it even more valuable. Like example on IndiaMart, more buyers join IndiaMart, then it's better for new suppliers who haven't joined IndiaMart to join because there are more buyers. So more are the number of buyers, and more suppliers will feel like they have to join IndiaMart because there are more and more buyers. So it creates a loop. It creates a loop even for buyers. If there are more suppliers, which means buyers will think they want something, they will go to India Mart because there are so many suppliers. So it's a loop. So this company has a strong brand and it has a very strong networking effect. One thing here, it says 43 million active buyers and 58% repeat buyers. This is a percentage that is very important and increasing. This is actually on the rise, 58% repeat buyers. 38% of suppliers are also buyers on the website, and it has a 4.8 rating on the Play Store app, which is good, very nice. Then we have 121 listed products, 98,000 categories. Again, 98,000 categories, everything from healthcare to construction. Not everything, but a variety of industries, chemicals, construction, etc. Then product specifications, pricing, photos, and videos. All right. It has 8.4 million suppliers and 218,000, 218,000 paying suppliers. This is the source of the revenue. Then here they have 29 million unique business inquiries. Unique business inquiry is a question. And basically, inquiry is kind of different from a question in the sense that it is a question by a buyer where a buyer states, it writes down all the specifications for the product it needs, and it indicates, an inquiry indicates that the buyer is very interested. And if they find a supplier, they're willing to pay for it. Okay. 152 million replies and callbacks. Huge number of replies and callbacks. Then finally, we have this ROI driven, ROI return on investment driven, subscription based revenue model, and RFQ quota. RFQ, request for proposal. I forgot what it means. We will discuss that later. So, this. You see this pyramid? On the top, we have platinum, gold, then silver monthly, then free suppliers. It gets money, IndiaMart gets money from only platinum till silver monthly. And the highest to the lowest, platinum is the most costly, then silver monthly is the least costly. And the higher you pay, the more services IndiaMart provides you. Here we can see top 1% suppliers, paying suppliers here 2000, okay, 2000. The ARPU, that is the average revenue per user, now is 1,059,000. Hold up, 1,059,000 rupees. 10 lakh, 10 lakh 59,000 rupees is the average revenue per user of the top 1% suppliers. Okay, contributing to 17% of revenue. Then the top 10% of suppliers with an ARPU, average revenue per user, is 3 lakh 17,000 rupees, contributing to 50% of revenue. And then we have the total number of suppliers, 2 lakh 18,000, with the average paying 64,000 rupees. So average supplier pays 64,000 rupees to IndiaMart. All right. So now this was the entire business model. It's a subscription based that the customer pays them before they provide the service, which is very important for their cash flow, creates very healthy cash flows. Now we can discuss some very important data points. All right. So first we have operational metrics. These are a number of metrics, okay, which are very important for them. Here we see, first of all, registered buyers. Okay. Let's first see registered buyers all the way from 2017 to 2025 and the growth rates. Okay. Registered buyers as of 2025 are 211 million buyers registered. 2024 was 194 million. 2021, 125 million. All these numbers are in millions. Not all these numbers, but some of these numbers are in millions. So the buyer metric, okay, registered buyers is in millions. Then 23% growth CAGR in buyers. Okay. Unique business inquiries, that is questions posted by businesses or buyers, that also increased by 17%. I believe these uh are these in thousands? Let's not talk about it. Then here we have paying suppliers. Let's pay attention to paying suppliers and ARPU. The paying suppliers, number of them, these are in thousands. Yes, these are in thousands, okay? So 96,000 in 2017. Here, 96,000 2017. 2021, we had 1,52,000 paying suppliers. And 2025, we have 2,17,000 paying suppliers with a growth of 11% annualized. And average revenue per user here is growing by 8% annually, okay, on average, from all the way from 2017 2021. Then here we can discuss the unique business inquiries. We already saw this. Okay, this is important. Paying suppliers. And this is becoming an issue for IndiaMart, a very big issue for them. The problem here you can see, you see this lighter blue. This is the number of suppliers they're adding, paying suppliers they're adding for quarter, and it's extremely slowing down. Okay, here you can see from 17 to 117, 24. I think 24,000 they added. Then 2000, 2020, they added 17,000. On 2023, they added 34,000. This year, they added only two. Here you can see this is for fiscal year 2025. This latest quarter, they added only around 1,700 something. Okay, they added around 1,700 something paying suppliers. In 20, in quarter three, fiscal year 2025, minus 4,000 subscribers, paying suppliers. Okay. You can see the growth has slowed down immensely. And there's only one big reason, is that the silver, remember those suppliers, the subscription model from platinum, then gold, there was a tier there that said silver monthly. These are the new suppliers. Basically, if you are a new supplier, you just joined IndiaMart and you are subscribing for the service, you will obviously go for the lowest tier. So this silver monthly, it's been experiencing a lot of churn. That is, suppliers are joining Silver monthly, but then they're leaving. Basically, Silver monthly subscribers are not satisfied with the service. That's why they're leaving. And that's why IndiaMart is struggling currently to add a lot of paying suppliers. But they're working on that. And the management said to pay attention for the next 2 quarters, the next 6 months, and see the results then. Because they're currently improving the, what you can say, the benefits or the service that paying suppliers, the silver monthly suppliers actually get. And this is a big issue and they're working on it. Then annualized revenue per user. Okay, this was 60,000. This is for per year. And you can see there has been a big jump. Okay, in 2024 and 2025, you can see it has jumped massively from 46,000 to 53,000 and from 53,000 to 60,000. This is basically being done because IndiaMart wants to sustain double-digit growth rate in revenue. And because total number of suppliers is increasing very slowly, they are relying heavily on average revenue. They're increasing the subscription rates. All right, they're increasing subscription rates so that revenue could grow at double digits. All right, all right, all right. So we looked at some of the important data. Now let's take a look at the balance sheet. Okay, this is the balance sheet consolidated. This is quarter one. Let's take a look at fiscal year 2025. Okay, we can compare these better with last year's also. There's some comparison. Very easy to do comparison here. Okay, okay. So total number of assets and liabilities are equal. This is basically accounting. Okay. Equity is also counted as the equity of shareholders is also counted as liability. But we're going to take a look at debt and all that. Now, first, cash and investments. Okay. Now these are all in crores. Here you can see 2,886 crores cash and investments, 666 crores of strategic investments. We will go into this. This is an important thing. Strategic investments. All right. These are investments into other companies. Here we have goodwill also. We have goodwill 454 crores. This is intangible asset. We cannot touch this on. Then here we come to capital and reserves. Capital, this is shareholders' money. Okay, shareholders' funds, the equity capital of the company, basically money the company raised by selling its own shares or doing an IPO and all that. Reserves, money set aside by the company for important things like if there's a crisis, they may have some reserve set up, money set aside previously in the past to help with this crisis, financial crisis, all that. So capital and reserves important for company, 2,185 crores. So this capital and reserves is not some debt owed to some borrower. So sorry, to some lender. All right, this is to the shareholders. I'm not a shareholder. Shareholders. Now deferred revenue is okay. Deferred revenue. Now deferred meaning to the future, sent to the future. As I told earlier, suppliers, right? They pay them a subscription. They pay them before the services are provided. Okay, they pay IndiaMart before IndiaMart provided service. That's why the money they give is known as deferred revenue, and this is unearned revenue because it only counts as revenue when IndiaMart provides them the service. So you can consider this as advances from customers. A lot of it is advances from customers, all right? It's not a real debt, like a debt to again a lender. Tax liabilities 53 crores, very small. Lease liabilities, if it took anything on lease, 33. Other liabilities, that is the all other liabilities, debt and all that, very small, 185 crores. This includes trade payables and all that. Basic thing to look at here, the liabilities way smaller than assets, way smaller. So maybe, just saying maybe, the debt, the gross debt and all that is not an issue for IndiaMart. Very debt light company, very a lot of assets. That was the balance sheet. Now, now. We looked at IndiaMart, right? We took a look at IndiaMart. But now let's take a look at its subsidiaries because that's a big focus for the company. So the subsidiaries and the strategic investments, okay, basically it's investing into a lot of other companies. We will take a look at other time. The video is already 25 minutes. So have a good day. Uh, bye.